Hi, this is Aswad Damodharan and I welcome you. I've been teaching corporate finance and valuation as my two primary classes going back more than 25 years. And those classes serve as bookends to everything I know about finance. Corporate finance looks at how best to run businesses, how to make investment decisions, how to fund those investments, and how much to pay in dividends. And in doing all of this, what the objective should be in running a business. In valuation, we look at the same business from the outside in, asking the question, given how these businesses are run, what value would I attach to the business? There is, however, a third class I've always wanted to teach, but I've never had a chance to do. And that's a class on investing. And here's the reason. There are three facts about investing that have always fascinated me. The first is, if you look at books, if you look at articles, there are hundreds of ways where it looks like you can beat the market. But there are so few ways that actually seem to work in practice. So that's the first issue. Why do so many investment strategies work on paper but don't work in practice? The second is, and it's in the same vein, if you look across very long time periods, it's remarkable how few investors actually beat the market. Given that millions try every year, you'd think there'd be more. And third, if you look at the successful investors over time, they don't share common characteristics. Contrary to conventional wisdom, they're not all value investors. I've seen growth investors, even chartists, make it a successful investor over long time periods. So that led me to thinking about investing, and in particular, what it is that makes an investor a successful investor. And this class, and the sessions that come out of it, reflect my thinking on the topic. I believe that every investor needs an investment philosophy. What's an investment philosophy? It's a way of thinking about markets, thinking about how they work, and more important, how they don't work. Because you make money by exploiting market mistakes. In this class, here's how I propose to approach this issue. I propose to spend the first few sessions talking about what I call the tools of investing. You need to understand how risk works out in markets, how it plays out in returns, how to measure it, and how to evaluate yourself. You need to understand valuation and how to use financial statements to get the raw data that you need to value a business, whether it's or value an asset. You need to understand how to look at a strategy and answer the question, does this strategy actually beat the market? So we will spend a few sessions setting those tools or getting those tools accessible for your toolbox. Once we've done that, we can turn to the real work in this book. And what I plan to do is go through a variety of investment philosophies. Here's what I'm going to start with. I'm going to start with charts and technical indicators. You're saying, you believe in charting? Sure. If it works, I'll use it. I'm agnostic. So I'll start off with charts and technical indicators, look at the core of why they sometimes work and why they sometimes fail, and how you can incorporate them into investing. In particular, I want to look at the behavioral assumptions that underlie most technical indicators. Then I want to turn to value investing. If there is a philosophy in which I would put myself, I'm probably more value investor than any other type of investor. But I want to talk about the various forms that value investing take in practice, why they work and why they might not work. Then I want to look at growth investing. Does it make sense to actually buy high growth companies, or is it always a losing proposition? Then we're going to look at trading on information. It might sometimes be illegal, but there are legal ways in which you might be able to trade on information and make money. Then we'll look at arbitrage. The same asset trading at different prices in different markets. Pipe dream, you say? Well, no harm looking. Then we'll close off by looking at the performance of active investors collectively. While I do that, I will try to stay as unbiased as I can. With each of these philosophies, not only will I try to present the evidence that is out there on whether the philosophy works, I will also try to lay out what you will need to have as an investor to succeed with each philosophy. And here's why. I don't think there is one right investment philosophy that fits every investor. But I do think that there is one right investment philosophy that fits you. The key to being a successful investor, in my view, is understanding yourself, not understanding what makes Warren Buffett tick or Peter Lynch tick. It's what makes you tick. So the course of these sessions will be to map out a way in which you can find yourself and find an investment philosophy that best fits your strengths and your weaknesses. I hope you will come along for the ride, and I think we'll have a good time. Thank you very much for listening.